Hello, I'm your host, Efi Pylarinou, and today I am going to delve into the world of digital payments, digital money, and I have the pleasure to have with us a young entrepreneur, visionary in the space of digital payments and specifically stablecoins, Kenneth Kumor, who is the founder and CEO of DLT Payments. Welcome.
Hey, it's great to be here today.
So I'm going to dive in. I like to think of your company as all the blockchain for finance companies as fintechs. They are the new cohort of fintechs that are really looking to change the infrastructure behind payments and money. And I'm very excited about this space. I noticed you and your startup on LinkedIn, and I thought to reach out and discuss with you on the topic of stable coins. I believe that it's going to be one of the many different versions of money that's going to exist, at least in the next 5 years. And I'd like to discuss with you your opinions and also learn more about your company. So why don't we start, you telling us a little bit about your background and how you see the importance of stable coins especially for underbanked communities or underbanked even businesses like small businesses.
Yeah, I think this is a really exciting topic in 2024. First off, my interest in fintech and crypto goes beyond just professional. Sort of before diving into the world of crypto, I was building software and just super interested in economics, philosophy, and with blockchain, these topics not only came together, but they also intersected in like a very powerful way. And this is what attracted me to the space. So I worked for quite some time in tech and consulting. And after getting some experience, I started my own agency and did pretty well. I've advised various clients, financial institutions, startups, and so on. And somewhat recently in 2022, stablecoin payments on Ethereum's layer 2, they started to take off. And I co-founded DLT Pay, which is a stablecoin payment startup where we want to bring DeFi and stablecoins into business ecosystems. So we have realized that the UX is still not smooth enough for everyday usage and that wallets, they need to be adapted to different use cases. The market for different kinds of wallets is infinite. So we raised 120,000 pre-seed round from Techstars, as well as we got support from partners like Chainlink, for which we are very grateful.
Interesting. And I mean, I want to understand why you think that we need a specific wallet for stable coins. Is it more because of the user experience? What are the challenges in, taking to market more stable coins? Because initially the use was really just as an on-ramp and off-ramp on crypto exchanges. Now I understand there's broader usage, especially in emerging markets. Tell us about this.
Okay, but first of all, let's take a step back and let's just define that we need to get better access globally to basic financial services. Everyone would agree with this. And stablecoins like USDC are essentially digital dollars that work around the world with all the stability of the US dollar. In Europe, we are seeing geopolitical tension pushing the euro down. And Europe is not really, an emerging market, but even here, it's crucial for both individuals and businesses to get their hands on dollars, which are the world reserve currency. And I understand this is still a topic with like a bit of mystery. So first, let's define what are stablecoin and its three main categories. So first, we have the fiat-backed stablecoins like Circle's USDC, where essentially real world assets like dollars or US Treasury bills, they are held with a regulated custodian and digital tokens are issued against these assets. Then we have stablecoins which have other digital assets as a collateral, And examples would be LUSD or DAI, where users borrow against their Ethereum or other liquid digital assets. And the third and the most controversial type of stablecoin is the algorithmic stablecoin, the infamous Terra, Luna. And these are not suitable for everyday users, and they carry a high level of risk. But to summarize it, it's a digital asset that's issued on a blockchain by a stablecoin issuer. And in most cases, this should be a financial institution. Potentially, this could be a DAO, depending on the local laws. But in today's conversation, I would like to focus specifically on USD-backed stablecoins, since I think this product is the most significant disruption in fintech to date.
And they are the largest market anyway already,
Yes,
right?
yes. What I want to add is that USDC, it's not reinventing the wheel too much with new monetary theory like Bitcoin. It's not really an experiment in this sense, but it's bringing the blockchain benefits like settlement speed and efficiency to the masses. And as for emerging markets, like you have mentioned before, they already rely on it for daily usage. Recently, a statistic was published that over 1/3 of consumers in Latin America have used stablecoins for everyday transactions. It's one of the fastest adoption curves in the history of any new technology. So it's really, really fascinating.
Kenneth, are these countries with high inflation that are storing their savings in some dollar-backed stablecoin because they really want dollars, and that's the easiest way to find dollars, because otherwise it's very difficult for them to find dollars, and it preserves the value of their earnings.
Correct. And as it happens, a lot of people in the US, they also don't have a bank account, roughly 6 million. And all these emerging economies, it's estimated to be more than 1 billion people that do not have access to a bank account, including the US dollar bank account. And stablecoins, they are a game changer for these so-called unbanked and underbanked populations. They essentially are offering a stable currency without needing access to traditional financial services where you have to do KYC. All you need is to have a smartphone and internet access. And
the wallets too need KYC, most of them, right?
Non-custodial wallets do not require KYC to set it up. All you need is a smartphone with internet access. But what I wanted to mention is that in terms of adoptions, of course, consumers, mom and pop shops, and very soon Amazon, it's just a matter of time that we will achieve the widespread adoption. But we really need to craft the right narrative, because right now the focus has largely been on the unbanked, as you have mentioned. But what we believe is that we need to engage more with startups, e-shops, content creators, and encourage these producers to accept stablecoins. So more payment use cases exist besides just trading, which you mentioned, the on-ramp and off-ramp.
Yeah. So do you think that the fact that PayPal, which is an established and large player, issuing a stable coin, a dollar-backed stable coin last year, that is a very good thing for the market?
I think it's great. PayPal is a publicly traded company. It definitely legitimizes the industry. The entry of PayPal's USD into the market, it really signals the growing acceptance of stablecoins and integration with the broader landscape of other financial services. What I really like about this is that it potentially introduces stablecoins to new audiences, like PayPal's existing customer base, which is really fantastic for the industry.
Yeah, but the PayPal stable coin, correct me if I'm wrong, it's only on Ethereum right now, blockchain.
Correct. Obviously, a big part of why we got into this space was the emergence of layer 2 stablecoin payments, which are bringing the fees down substantially, making microtransactions possible. And obviously, it's not a great system where you have to pay $5 for a transaction of $2, like with the L1 on Ethereum. But obviously, just beyond this basic use case of settlement, a big one that PayPal USD or Circle USDC are bringing to the table is financial automation, also investment automation, and the whole concept of programmable money, essentially giving you a new way to engage with the digital economy that was not possible with dollars held at JP Morgan checking account. And then you have like special B2B cross-border payments to suppliers, large volumes. You can save a ton on foreign exchange fees. Like in summary, it's just much better in every single way compared to the traditional fiat payment rails.
I understand that for micropayments, we need, and I'm sure this will evolve, and PayPal, like USDC from Circle, they'll be on more blockchains. They'll be adding more blockchains. That will require some time. The question is the use cases. I can see the cross-border use case and the micropayments use case and the FX issue as a major fintech disruptor. Tell me about your concept of having a dedicated wallet for stablecoins.
All right, well, it's 2024. We live in a real-time interconnected economy. Your audience is global, your suppliers, your employees, they're all scattered around the world. What we really believe in is that creators, e-shops, basically people doing business online, they oftentimes have difficulties earning revenue from their audience due to transaction fees, foreign exchange fees, slow onboarding, and payment processing that is inherent to the traditional system. What we are trying to do is create a stablecoin-centric wallet that offers reliable, cost-effective means of transactions and to enhance revenue generation process. This will allow like different groups beyond just the unbanked, like entrepreneurs and creators, to accept payments in stablecoins, sort of steering clear of the complex onboarding process tied to standard payment gateways like Stripe. So this will ensure a much faster access to their earnings. Like with Stripe, of course, the user experience has improved drastically. They have introduced several no-code tools, but the process is not so straightforward, like just downloading an app. You still do have to upload substantial amount of documents, and essentially the process is not instant like with stablecoins.
So yeah, but you have to make it an easy integration, because you're talking about the fact that Stripe, for example, needs different steps of integration for the merchant, no matter how small or big they are, to integrate. Is that what you're talking about?
Correct. Well, with a stablecoin-centric wallet, we are really trying to respond to specific needs of the ecosystem. Someone that is not generating, a substantial revenue, it might not be necessary for them, let's say, to incorporate. And with Stripe, you're often essentially forced into registering as an LLC due to various, tax and like administrative reasons. And there is like a whole process, the approval might take weeks, months. Imagine you are a creator in an emerging economy and Stripe does not provide services there. So what options do you have left?
Well, there's all the other options of PayPal and Pioneer and all sorts of other options depending on the jurisdiction that people find, but then there's a lot of fragmentation in the market.
Correct, but in terms of population, that they do not have like KYC credentials, so PayPal will not serve these clients, unlike USDC.
Understood. Tell me more about the side of the regulation and the side of talking about the risks of stable coins, like the depegging risk is the biggest risk that is typically discussed.
Well, speaking of risk, context is all that matters. Well-managed USD-backed stablecoins like USDC issued by Circle, they're actually very low risk and by far the most convenient option for those in regions with volatile local currencies. Of course, we did have the events related to the Silicon Valley Bank, which caused USDC to momentarily depack and fall to roughly 80 cents. But this is a feature of the fiat financial system and not of USDC per se. So we believe that stablecoins, they are essentially the only thing that people and businesses have in these parts of the world. And like Venezuela, where socialist policies have led to the decline of the economy and high inflation. This is also true for parts of Africa, Southeast Asia, and other emerging markets. So stablecoins, they offer a pretty low risk hedge against local currency volatility, in these sort of uncertain time in these markets.
So basically, you are saying that there is a need for US dollars, especially in the emerging markets. The access to dollars is not given, and stable coins, these dollar-pegged stable coins, can give a very easy access to this.
Correct. As I mentioned, we see stablecoins as a stable sort of value, with the same speed and security of blockchain, Ethereum, and all that. And essentially, they are the only alternative to those left behind by the traditional financial system. And I like to think in terms more in like the economic terms, where the concept of a stablecoin and many of the other finance 2.0 ideas, they trace their roots back to Friedrich Hayek, and there was this book called The Denationalization of Money, where, according to Hayek, private businesses should be allowed to issue their own forms of money, deciding to, how to do so on their own, which will make the entire economy more resilient. So we are fully in support of sort of, more companies coming in besides Circle, PayPal. What we are building at DLT Pay, we fully support, having more stablecoins around. We don't think that there should be just one dominant player on the market. We think that fragmentation is good, and this can be largely abstracted away, through wallet interfaces, bridges, and, different cross-chain tools.
And the dominance that Tether clearly has, whether it's by market cap or by volume, how do you explain that, or what do you think the solution to that is, to create essentially a market that is not so dominated by one player?
Correct. Well, USDT, it's the elephant in the room. It has not been properly audited. Of course, they've been around the longest. They pioneered the concept. There are many question marks, around that project. At this point, many would say it's too big to fail. But even if part of the reserves are missing, it's unlikely that there will be like a full-on collapse like with Terra. There might be, that some of the creditors might be, redeemed 80%, 70%. No one knows. On the other hand, the rumors might not be true at all, and it could be a project that is run, properly, that they have sort of found a way to deal with the principal agent problem and the moral hazard, surrounding this sort of position of power where you have so much into deposits, and then you are earning also interest on that through various instruments, money market funds, treasuries, and all that. So you can build a really nice business model to sustain this project beyond just some shady activities, as many would say. So I hope that it will not implode, and if it ever happens, I hope that there will be some processes in place to sort of limit the exposure. That I don't believe that this will end the same way as Terra Luna, but we of course do not endorse it in the same way as USDC, of course, issued by Circle. They recently filed for an IPO, so they will be a public company. There will be much more oversight than with USDT. So it definitely remains a bit of a mystery and touchy topic.
It does. It's quite controversial. However, I must admit that if they have been able to make it through the crypto winter, and now given the fact that They have been dominant and they've earned, I was reading the latest profits in the last quarter of 2003. It's 2.85 billion in profits from 1 billion is from interest. So they have a big cushion now because of the high interest rates that didn't exist, a couple of years ago. They were earning close to nothing, right? All of these stable coins. So hopefully with that cushion, they should be in a much safer place than they were, 3 or 4 years ago when interest rates were close to zero.
Hopefully, yeah, that's something that we really wish for. We wish them all the best. They are a very important part of the ecosystem. All the exchanges there are trading pairs against the USDT. It is still more dominant than USDC. So we hope that they will undergo a transformation into a more transparent company, and that they will continue to innovate, potentially bring on more products. For instance, a project that I really like is this, we're working with them, it's called Open Eden. So they are bringing essentially treasury bills on chain, where rather than just holding USDC and earning nothing and having Circle or Tether sort of earn that interest. So what they are trying to do is pass on the interest to the holder of the stablecoin. So I think there is lots of innovation going in.
I like that. Is that a side project of Tether or it's independent?
No, there are several projects out there. Like I mentioned, Open Eden, they are based out of Singapore. Then now recently MakerDAO has introduced SDAI, which is savings DAI, which I believe is somehow connected with treasury bills, that the interest is not coming from P2P lending. It's actually coming off chain from TradFi instruments. And then there is also Maple Finance and a couple of others. I also read recently Franklin Templeton tokenized US Treasury. Also, I haven't seen it traded anywhere, so it could have been on some private blockchain, but there is lots of activity and we are really excited about this.
Clearly, the space is evolving, and as I'm listening to your insights, we do have to keep in mind that relative to the traditional markets, the crypto market and the stablecoin market are small and new, so there will be innovation. Naturally, there will be dominant players for now. Like Tether, we have Coinbase, for example, being a dominant custodian in the Bitcoin ETF market in the US. Just because all these are new markets, it's natural to have these, but as the market grows, there will be more mature dynamics, which will be good for everybody, pricing competition, better service. I would like to see more impact on SME financial inclusion for SMEs through stable coins. I already understand the impact for retail, especially in emerging markets. And as you mentioned, if the user experience is much better, then we will see even more adoption in the market. Now, in the developed world, in our world, where do you see the value? Is it on cross-border payments?
Definitely, that's part of it. Beyond just the payments use case, as I have mentioned, there is lots of projects that are developing tools for automation of investments, like dollar cost averaging. You can have a smart contract that automatically takes like a few $100s of stablecoins from your savings wallet, and it puts them to, let's say, tokenized S&P 500 or some other index fund or a different ETF. So there's lots of cool things that you can do on this front. As well as in terms of just treasury management for SMEs, smaller enterprise. What is one of the features that we are also building is that some stable coins that you have received from your merchant account, from your customers purchasing products and services, if at the end of the month there is still some balance, you can allocate it to, let's say, treasury bills or other sort of risk-free instruments. While we are still in this high interest environment, we want to help people sort of and businesses take advantage of this, and to also sort of answer the question, where does the appeal come from for players in developed markets in the States, in Europe? So we believe that stablecoins, they will serve as a gateway to real world assets, like I mentioned, the treasury bills or other potential investments. Even as a business, it's not so straightforward to open a brokerage account and to get exposure to all these instruments, especially when you are dealing with smaller amounts of money, let's say, six figures, mid seven figures. Usually you do not have an account with like a banker at the Citibank. Like I know sort of how it works from my experience, and you do not get the same level of service. So I think what is really something that everyone can look for is the increased competition and more products, more innovation. I'm also a huge fan of the traditional fintech space. I've been one of the early adopters of like Revolut, TransferWise, and all these products that are available here in Europe, where they provide free euro accounts. So I'm seeing that many of them actually they are already integrating with some stablecoins, notably Revolut, and in Latin America, Nubank. They have recently signed a memorandum with Circle, so they'll also be introduced USDC to their many millions of customers. So it's very exciting to see these developments and actually see these like established players make these partnerships and go out of their way to innovate and get more market share from sort of the legacy players like Deutsche Bank, Santander, and all these other sort of established banks. That they're, I would say, banking apps, and they do not have an incentive to innovate or to provide a better experience to the user as much as these sort of startups.
But I must say that the neobanks that you refer to, they are built on the old rails. So they need to find a way to integrate the new rails, starting with stable coins and not just staying to, offering their clients just to be the ability to buy cryptocurrencies as an investment, because that's not really, a big disruption or innovation. It's really a customer acquisition channel in a way. The case that you refer to on business banking, I find very interesting, meaning that, like in my case, I'm a solopreneur, I have a business account. When I asked whether the cash that is in the business account in different currencies, whether it can be invested, it can't be invested. It's a whole new process. It's not possible. And this is exactly what is needed. And that type of innovation should be pushed from the blockchain world, where everything can be done natively. There aren't those frictions and the silos that exist in the existing system.
Correct. There is a huge amount of gatekeeping and friction in the traditional financial investment space. Unless you have $10 million plus, you're not an interesting client. They will not make a significant profit margin on you, and therefore you will not get access at all, or your access will be very limited and your fees will be much higher. While with stablecoins and sort of this new finance 2.0 paradigm, where you take traditional financial assets, you tokenize them, which makes them more accessible, this lowers the fees significantly, and the products, they become self-serve, where you don't need the banker at all. You are your own banker, because the user interface sort of abstracts all the complex parts, and it's sort of now easy to pick, okay, I want to allocate my funds, in this particular way, or, I'll just keep them sitting on the account where there are no fees charged. So I think the value proposition is there, and now it's about raising awareness, building products that people and businesses want to use. As we mentioned, a wallet, every use case sort of can have a wallet that is adapted to it. So we believe that the market is quite huge, and essentially every company will become a fintech company, in the sense that perhaps in the future, Starbucks in their app, now you have loyalty points and they are not transferable, but in the future you will be able to transfer the Starbucks loyalty points to your friend or to someone else through blockchain settlement layer, perhaps a layer 2 like Arbitrum, Optimism, or recently introduced Base, by Coinbase. That's also very exciting that they are going in this direction. So there is, lots of things to be excited about.
Yeah, I was reading just this weekend, I think, that PayPal Ventures invested in a company called Mesh that is really about aggregating different wallets, because that is really needed, this integration of different wallets. So you could move whatever digital assets you have, whether it's an NFT, loyalty points, crypto, stable coins, from one wallet to another. It is really very exciting and essential. And what you mentioned before is really about changing the unit economics, because right now the unit economics for banks it's not profitable. They'll be losing money if they serve, small business accounts or medium business accounts. They can't do that in a compliant way. And what we're really talking about is how to do this in a compliant way and profitable.
Correct. Well, there are many challenges in, achieving this seamless integration with sort of the traditional system, and there are still many limits on the usability for everyday transaction, but it's something that many very passionate people are working on, and I think we will see great progress in the coming years.
Thank you so much, Kenneth, for sharing your insights. It was a very exciting conversation, and I will share with our audience your details and your online presence. Thank you very much.
Awesome. Thank you for having me.